ICICI Prudential Silver ETF Fund of Fund. This is an NFO launched by ICICI Prudential recently. Silver ETF itself is launched by ICICI Prudential recently, and a fund of that is also launched. We will be reviewing both in this video. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision to reach your financial goals faster and smarter. First, let us understand the issue details of this NFO. It is a silver ETF fund of fund. That means it is a fund of fund. This fund will collect money and in turn invest in another fund, which is silver exchange traded fund. Fine. The issue is open on 13th January 2022. NFO closes on 27th January 2022. And after 5 days of NFO closure, the fund is open for regular purchase and sale. We have to understand the key features of this fund of fund so that we will be able to analyze and evaluate this investment option. What is silver ETF? They collect money from you and me, investors, and in turn they invest in underlying asset as physical silver. What is the benchmark? We will see. Minimum investment as a lump sum, it is 100 rupees in this fund of fund. Even for an SIP investor, minimum investment is only 100 rupees. Benchmark is domestic price of silver as derived from LBMA prices. That means local rupee denominated market price of silver. What is the investment objective of this ICICI Prudential Silver ETF fund of fund? It is an open-ended silver ETF fund of fund scheme which will invest in silver ETF fund as a fund of fund category. The aim of the silver ETF is to generate returns that are in line with the performance of physical silver in domestic prices. This is the objective. Whether the fund will meet this objective or not, we will see during the review. They are trying to deliver returns equivalent to the appreciation of the physical silver in the domestic market. Before going into the details of this fund option, pros and cons, all those analysis we have to do, first we have to get some important insights about silver as an asset class, because end of the day they are trying to achieve physical silver returns. What is the return the physical silver investment will give? This fund is going to mimic that. As simple as that. So we have to see how silver as an asset class is going to contribute to our portfolio. If we know that, then we will be better informed to take a decision. So we will first analyze silver as an asset class and get some good insights. Then based on that, we can go back to this particular investment option and evaluate. Fine. So for time being, let us forget about ICICI Prudential Fund of Fund. Let us take only silver as an asset class. We will evaluate in detail on 3 important points. 3-point evaluation is the technique we are going to use to evaluate this asset class. First point, returns. Will this hedge against inflation? We have to see what kind of returns it has delivered in the past with specific numbers. We have to see correlation data, how silver has performed vis-a-vis gold, vis-a-vis equity. By adding this, do I really diversify? What kind of diversification this is going to bring? Already in our portfolio, we will have equity, we will have fixed income, we may have gold. By adding silver, what kind of diversification we are going to get into? That we need to see, because that is an important point to analyze diversity correlation. Third is market price discovery. When the silver ETF is traded in the market, like how it is going to give a market rate for it, that we have to see. The physical silver has got a price discovery in the market. There are sales, buy and sell sales happening. Because of that, there is a price discovery. When this becomes a financial asset, what is going to be the price discovery mechanism is something we have to find out. We will discuss all these 3 points in detail. First one, in the 3-point evaluation, returns. This is the past return chart across different currencies. Silver, what return it has delivered in US dollar, in different currencies it is mentioned in this chart. Last but one is in INR. In 2007, it has delivered 2% return. 2008, it has delivered 6.1%. Like that, for every calendar year, it has delivered different fluctuating returns. Some years it is green, some years it is red. It is not a straight line. It also has volatility. It also has ups and downs. So it is not like an AFD, which is going to give you straight appreciation. Like an equity, this will also have ups and downs. That is what we have to understand. Now, from the data in the INR column, like at what rate this is appreciating every year, we are going to find out the overall CAGR in the next slide. See, the first tabular column explains 100 rupees invested in 2007 in silver. What could have been the historical returns based on the actual past data? We have done this. 100 rupees invested will become 336 rupees at the end of 14th year. The total CAGR for 14 years is 8%. CAGR for 14 years is 8%. 8% seems to be a reasonably good return, but we have to understand 2007, 2010 are periods where we had a high inflation and the interest rates were much higher. Interest rates were around 10%, 9% kind of time frame. Including that, it has delivered 8% return. So if we move it only for the last 10 years, what is the kind of return? We can move to the second table. From between 2011 to 2021, in the past 10 years, if someone could have invested 100 rupees in 2011 in silver, it could have appreciated to 140 rupees today. Sorry, 127 rupees today. 100 rupees has become 127 at the end of 2027. If you work out the CAGR for 10 years, this works out to 2%. Only 10 years is such a long period, but silver has delivered only 2%. So what do we infer from this data? What is the insight from this data? Even in the longer time frame, there is a probability it can beat inflation. It cannot beat inflation also at times. It may give you less than inflation beating returns. There is no assurance or guarantee that this can give you inflation beating return in the long run. Number one. Then number two, considering the volatility ups and downs, is this a good risk premium return? No. So these are all the insights we are getting from this first point evaluation of returns, past return data. Second important thing which we have to do is a comparison with other asset classes Here we are doing comparison just to see what kind of diversification this is going to give to our portfolio. Right? When we add gold to our portfolio, they have a clear correlation. When equity market goes up, gold will not go up. But when equity market falls, gold will drastically go up. So this negative correlation helps you get better diversification for your portfolio. It reduces beta of your overall portfolio. Similarly, we have to check how silver is going to add value for diversification purpose. When we have looked at it, it has got a similar pattern to gold. Though it has got a similar pattern to gold, in the last 14 years research, this research data is provided sourced from valueresearchonline.com. So we are giving credit to the source. So from this reliable, credible source, in the last 14 years time frame, out of that 8 years, gold has beaten silver. So what do we infer from this data is, when we include silver in the portfolio, this is not actually giving a different pattern. It is not adding anything to the diversification. Correlation seems to be more or less similar to gold because of that, and it is also not a better performer comparatively in most of the times. No, silver is not a better player. Gold seems to be a better player in the market. So considering this, from correlation point of view, silver is not adding much value to your portfolio. Then number 3, and it is very important, when this is launched as an ETF, what is going to be the price discovery mechanism? In regular mutual fund, there will be an NAV. When it is launched as an ETF, right, then it needs to be purchased and sold in the market by the buyers and sellers. So what will be the demand and supply mismatches we have to see? The NAV may be 100 rupees, but because of poor demand, the NAV, the market price on which the ETF units are sold may be coming down. It is quite possible with any ETF, exchange traded fund, it is possible because of the poor transaction volume. So that is why daily volume of silver ETF we have to check, because gold has got wide acceptance in the market, silver is not. And even individual retail investors are willing to do trade, willing to buy and hold gold in their portfolio, because gold is considered traditionally an accepted investment, psychological mindset. But silver, we have to see a breakthrough in the mindset. So daily volume of silver ETF, how it is going to be, we have to wait and watch. In the initial phase, I am expecting that there will be a gap between the NAV and the market rate. Means the NAV will be higher, but the market rate may be available at a discounted rate. So how this gap is going to be narrowed down by ICICI Prudential is we have to wait and see. So we have completed the 3-point evaluation from the returns point of view, from correlation diversification point of view, and also from price discovery point of view. This could have given you a decent idea on silver will be a good asset class for your portfolio or not. Right? If this basic analysis before going into the actual review has given you a reasonably good analysis, then in that case, you will be liking our regular insightful webinars which we host. It is completely a free webinar which we host regularly. I suggest you to enroll for our upcoming webinar. It is a free webinar. We call industry experts and do this webinar regularly. The registration link for this free webinar is available below this video in the description box. As we have completed silver as an asset class evaluation, we will go back to our ICICI Prudential Silver ETF Fund of Fund. What is the potential merits of this investment option? There are many obvious merits. Less storage cost. If you are buying silver, then you have to physically hold it. So it is a precious asset. So we have to store it in a safe place. So this will have storage cost. Whereas when you are buying it as ETF, it will have less storage cost. Probability for better liquidity. When you are selling physical silver, it is difficult to encash it. You may have to exchange it for a jewel at times, or if you are encashing it, you may be encashing it for a discounted rate. All those things may be not there if there is potentially good volume in the online market for this financial ETF. Better diversification possibilities. This is one of the reasons, but we have seen the data otherwise. Better diversification possibilities. If the data points changes over a period of time, this may become a better diversification possibility. No fear of theft. This is all KYC done. It is in your demat account or in your unit statement. So there is no fear of theft. Whereas if it is a physical silver, someone can steal it from us. So these are all the potential merits of this ICICI Prudential Silver ETF Fund of Fund. Similarly, we have to see what are all the potential demerits of this policy so that our analysis will be complete. Price volatility, we have seen it, right? 14 years it has delivered 8% return, whereas for 10 years it has given 2% CAGR, and also year after year there were some green years, there were some red years, there were some neutral years. So there's a wide range of flexibility. So considering the volatility, am I getting a better return? No. Does it better than gold in my portfolio? Definitely no. Gold seems to be having better acceptance, plus better recovery, quicker recovery during crisis. Then diversification point of view also, after adding gold, silver is not adding much value there. There is no better correlation figure. So that way also it is not a better diversification. Considering the volatility it brings us to the portfolio, does it give a premium return? No. The maximum return that's given is only 8% in a longer time frame like 14 years. So that way it is not bringing a better risk adjusted return to our portfolio. As discussed earlier, price NAV deviation will be there when the ETF is getting traded in the market. How this fund is going to manage that, that is something we have to wait and see. What is the real purpose of this silver ETF in my portfolio? Because it is not giving me good return, it is not giving me diversification. So why should I have this in my portfolio? I am not able to get a convincing answer for this question. Because like there is no convincing answer, I'll say I'll settle with less. Say like equity, fixed income, gold, this itself is sufficient. By adding one more thing, I'm actually bringing more volatility, not higher return, not better risk insulation. No. So less is more in financial investments. When we bring more assets which are not actually adding value, then it creates a mess. So we can keep it simple. Gold is sufficient to insulate your portfolio from the risk of equity. Equity and gold has got a better negative correlation compared to silver. So we can settle for less is more in investments, having more and more assets instead of diversification, it can dilute our returns. Even after this, if you are excited about silver ETF fund of fund, then I would suggest this particular investment is not for your serious money. What do I mean by serious money? You got money you are accumulating for your retirement, accumulating money for kids' future, like that. You are accumulating money for your must to have financial goals, right? So it is a serious money. Don't invest your serious money here. You may have some fun money element. You have money for all your serious goals, must to have goals. You have already accumulated money, you have already have plan in place. In addition to that, you have some fun money. You want to go for international vacation. It is a nice to have goal. It's a fun, like maybe that money I want to, some portion of that money I want to put, or like I have some money set aside in my portfolio where like I will experiment these kind of things, speculate, gamble. That portion of fun money can be invested on an experimental basis in this portfolio, but not for your serious money. The money which you are investing in order to achieve your must to have goals, please don't invest in this fund. So what is the final take on ICICI Prudential Silver ETF Fund of Fund? So far you have come with me. If you think at this point ICICI Prudential Silver ETF is worth investing, just put a comment yes. If you say it is not a worth investment, then just put a no as a comment. We can wait for the NAV and price gap to narrow down first and see how like this NAV and price gap is settling down. There is no hurry to invest in NFO. We can wait. Then number two, even after that, silver as an asset class, it is not for your serious money. It is only for your fun money. Over a period of time, if the data points change, silver becomes a different asset class, completely has got a different like behavior pattern compared to gold, then we can consider adding silver in for your serious money. At this point in time, it is only for your fun money. If you have liked this video and if you think this video has given you a reasonably good insight and you have some more questions related to this particular product or any other investment options, feel free to register for a free appointment with a financial planner. The registration link for the free appointment is given in the description box. If you have liked this video, please share it with your friends. If there is some good takeaway from this video, feel free to note down your learning in the comment section. That will help us understand how far it is reaching and fine-tune our future videos. Finally, if you are not subscribed to our video so far, please subscribe to our YouTube channel so that you will not miss any of our future videos. Thank you. Bye.